Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, January 27, 2026, and here is everything you need to know as the markets close for today. We've had quite a session with plenty of action across the board. Let me walk you through the major developments. Starting with the closing bell, the Sensex finished up 319 points at 81,857, a modest gain of 0.39%. The Nifty 50 closed above the 25,000 level with a gain of 126 points to finish at 25,175, up 0.51%. The big outperformer today was the Nifty Bank Index, which surged 1.25%, adding 732 points to close at 59,205. Bank stocks clearly found their footing today despite early weakness in the session. Overall sentiment improved through the day, with the market trading range-bound in the morning, but finding buyers late in the trading session that helped close near day's highs. The Indian Rupee held steady through the day, trading in the range of 91.7 to 91.83 against the US dollar. While there were no new record levels for the Rupee, the currency remained relatively stable, providing support for exporters ahead of potential shifts in global trade dynamics. The rupee's steadiness was notable given the broader geopolitical backdrop and currency volatility seen in Asian peers. On the gainers side, we saw some standout performers. Adani Enterprises led the Nifty 50 higher, with a sharp 5.11% jump, making it the biggest gainer on the index today. Axis Bank added 4.58% following positive third-quarter earnings results that beat market expectations. JSW Steel rose 3.25% while Adani Ports climbed 4.5% and Grasim Industries gained 3.12%. The metal stocks in particular showed exceptional strength today, riding broader recovery momentum. Among the losers, Mahindra & Mahindra fell 4.23% as the auto sector came under selling pressure. Kotak Mahindra Bank declined 2.63% after its third-quarter results disappointed on margins and asset quality concerns. Asian Paints dropped to 2.8% following a reported decline in consolidated net profit in the December quarter on a year-on-year basis. Eternal and Tata Motors PV were also among the bigger losers for the day. The overall breadth was reasonably balanced, with 1632 shares advancing and 1566 declining, suggesting selective buying rather than broad-based momentum. Looking at support and resistance levels, the Nifty 50 held above the critical 25,000 support zone, which has maximum open interest anchored there. Immediate resistance for the index is in the range of 25,200 to 25,300, where significant call writing exists. If the market sustains above that level, we could see short covering rally toward higher levels. The major support zone extends down to 24,919, where the recent low is anchored. BankNifty found some relief after testing the 58,121 support level earlier in the session. The near-term resistance for BankNifty sits at 58,675, with a stronger hurdle at 58,820, representing the previous support turned resistance. That 58,100 support cluster proved critical today for the index to stabilize and eventually climb back. Sector-wise, it was a mixed picture. The star performer was the metal index, which surged 3.07%. buoyed by gains in major metal stocks and strong demand expectations from the newly finalized India-EU trade agreement. The PSU Banks, IT stocks, oil and gas and energy sectors also ended in positive territory. However, the auto sector suffered as it fell 0.93%, with most auto stocks trading lower through the day. The FMCG, media and consumer durable sectors also lagged, ending in the red. The broader story in sectors was very clear. Beneficiaries of the India-EU trade deal outperformed while defensive and inward-facing sectors underperformed. Now to a major catalyst that drove sentiment today. Early this morning, India and the European Union officially finalized what's being called the mother of all trade deals. This is a landmark free trade agreement that covers approximately 25% of global GDP and creates a vast trade zone spanning 2 billion people. The deal eliminates tariffs on 97% of European goods, with most seeing zero duty immediately. For Indian exporters, this is transformational. The sectors set to see huge benefits include textiles, gems and jewelry, chemicals, pharmaceuticals, leather products, and crucially metals and metal products. The EU will slash tariffs on Indian gems and jewelry to zero, and major industrial imports will see significant duty reductions. This explains the sharp outperformance in metal and related stocks today. The market clearly priced in immediate positive revenue and margin implications for exporters in these sectors. The deal is expected to be formally signed after a legal review of 5 to 6 months, with implementation anticipated within a year. The announcement itself was enough to lift sentiment and drive a late-day rally, particularly in beneficiary stocks. On commodities, we saw strong continued momentum in gold and silver. Gold was trading at a fresh peak of 16,195 rupees per gram for 24-carat purity, marking a new high for the calendar year. 22-carat gold finished at 14,845 rupees per gram. The rally in gold reflects broader global geopolitical tensions and a flight to safety by investors. On the international side, gold has broken above the $5,000 per ounce level for the first time in history, a remarkable milestone that underscores safe haven demand. Silver too has continued its bullish march, finishing at 370 rupees per gram, a fresh high as well. The rise from 325 rupees just days ago to 370 today showcases the strength in precious metals. On the crude oil front, it was a bit subdued. WTI crude was trading around $60.63 per barrel, reflecting the structural well-supplied nature of the oil market. While geopolitical tensions support a risk premium, crude has struggled to build on gains, because major analysts expect a global supply surplus this year, with Goldman Sachs projecting WTI to average around $52. So gold and silver are clearly the safe haven assets today, while crude remains anchored to fundamental supply-demand dynamics. On the regulatory and policy front, we've seen important developments in derivatives. Recall that beginning January 27, 2026, NSE has reduced lot sizes for major index derivatives. The Nifty 50 lot size has been trimmed from 75 to 65 contracts, while BankNifty lot size has been cut from 35 to 30. This reduction aligns contract values with current index levels, making it easier for retail traders to participate without extreme capital outlay. Each point movement in Nifty 50 now generates 65 rupees profit or loss per lot instead of 75, and for BankNifty, movements yield 30 rupees instead of 35. This is the monthly expiry date for January contracts, so the impact on position sizing and margin calculations is particularly relevant today. Meanwhile, SEBI has continued strengthening retail investor protections in F&O trading. The regulator has maintained focus on position limits, standardized risk disclosures, and margin frameworks. Brokers are now required to show loss probability statistics for new F&O traders before granting access. These changes represent a calibrated approach to curb speculative excess while preserving legitimate hedging activity. Looking forward to tomorrow, the technical outlook points to consolidation with a bias toward cautious trading. The Nifty 50 has immediate support at 25,000 and 24,919, with resistance at 25,200 to 25,300. A sustained break above the resistance zone could trigger short covering toward 25,400 to 25,500. BankNifty has support at 58,121 and 58,000, with resistance at 58,675 and 58,820. The market structure remains indecisive, with downside bias not confirmed. The broad market breadth remains balanced, suggesting selective buying rather than aggressive institutional buying or selling. Key catalysts tomorrow include any follow-up commentary on the India-EU deal implementation, quarterly earnings updates from remaining companies, and global cues from the Fed policy meeting, which concludes Wednesday. Crude and commodity movements will also be watched given the volatility in precious metals. Here's the one actionable takeaway for traders and investors. The India-EU trade deal is a structural positive for metal stocks, chemical companies, and pharmaceutical exporters. If you've been waiting for entry points in quality metal names that have lagged, today's rally might be just the beginning of a multi-quarter re-rating. However, position yourself conservatively. The broader market is consolidating, so use any weakness towards support zones to add positions gradually, rather than chasing rallies near resistance. Remember, we're still in an environment where geopolitical risks remain elevated, and global monetary policy is in transition with the Fed meeting this week. That's a combination that historically calls for selective exposure rather than aggressive bullish bets across the board. Watch the 25,000 level on Nifty closely. If it breaks decisively on closing basis, we could see a test of the next resistance around 25,300. If it falters, the 4,900 support becomes critical. Make sure to manage your positions with defined stops and take profits at your target levels. Send in your questions and observations about today's market action. Whether you're trading options on the expiry dates, building positions for the medium term, or just tracking the markets, we want to hear from you. Tune in tomorrow for our morning wrap, where we'll analyze the Fed's policy announcement and its implications for Indian equities and the rupee. We'll also track how the India-EU deal plays out globally and whether metal strength sustains. Until then, stay disciplined, follow your trading plan, and we'll see you tomorrow morning with all the latest updates. Thanks for tuning in to What Moved the Market. I'm Prem, and this is your evening wrap for January 27, 2026. Good evening.